All right, well, let's take a look at the economic picture and, of course, how that's influencing investor thoughts and sentiment at the moment. Pete McGuire joining us from XM. Pete, terrific to talk to you. So, of course, that market volatility continuing with much to consider. Obviously, the big issues at the moment being inflation, but also Omicron.
Absolutely. Good morning, Andrew. Good morning, Kara. Yeah, with those numbers that we saw on Friday night were far weaker than expected, and that really puts a lot of concern as far as that inflation number. You're thinking it could hit 7%. We've got numbers coming out on Wednesday from the US, and if it creeps towards that number, Andrew, then that really demonstrates I think the pain that's being felt on Main Street, maybe not for the multis, but certainly for the man on the street, the woman on the street, and high fuel prices and everything wrapped into that inflation number.
So Pete, we do have the RBA this week. It's their last meeting before Christmas. What are your expectations?
I'm not expecting any surprises, Kara. I think it'll be more of the same of what we're experiencing. And the softness as far as Aussie dollar has been a win for them. So we're now trading right on that 70 handle. We'll be in the 69s probably sometime today. And I think that the RBA is looking at the global picture, seeing as far as unemployment numbers, what their concerns are naturally as far as inflation, house prices and so on. And I think it'll just roll on and see how Christmas sales are and the general health of the economy come, February.
Yeah, because Pete, certainly the last read, it showed surprising resilience, didn't it? Particularly through that lockdown and hence the bounce back as we head towards Christmas. Yeah. So what do they need to be considering as we head into next year? How big a part is the China story going to be playing?
Well, very much so, Andrew, and that seems to have to work out through the December and January period, the ever-growing story as far as Evergrande and the property sector. So how does that unravel? And then the uncertainty as far as the other impacts leading to the domestic Chinese economy, debt and so on. So yeah, we're keeping a very close eye on it. Let's see if there's any breakouts come before Christmas as far as announcements or the property sector capitulates further. That's where I think everyone's eyes on, because it holds roughly about 30% of their economy at a $62 trillion business sector.
Pete, let's talk Canada, because it was a bumper jobs number. How did dollar CAD react?
Yeah, Canadian dollars had a nice move, Kara. It's been a very, very much a one-way trip there. So it's strong domestic demand, and we've seen that as far as the Canadian dollar. So it's been a boom, and currencies over the last week haven't let us down. The last 3 weeks have been outstanding, and I think this week possibly will continue. So it's 4 weeks of just, incredible trading opportunities across the currency sectors.
Well, speaking of which, let's go to the Aussie. In fact, as I speak, it's just fallen below 70 US cents, sitting at 69.98. How are you seeing that travelling at the moment, Pete?
Well, Andrew, we've seen it fall from that 74. I remember talking to Kara a couple of weeks ago, and it was at 74. We said it probably got further softness, and it certainly hasn't disappointed. So it's been very much a push down. So that's helped as far as the RBA is concerned. But the other thing is, probably it's got the potential to be a 68 odd handle. I'm not sure where a floor is, but it's just offering so much further opportunity for traders. It's a glory trade, one of the most heavily traded currencies in the world, number 5 or number 6. So that against the US dollar. So that US dollar index is sitting not too bad, sitting at about 96.15. If that strengthens up from here, then I think that there's further softness across that Aussie.
Pete, how are you looking at the commodities play at the moment? OPEC was in focus last week as a lot of those reserves from the US now filter through the market. Oil price action, what can we expect from this week?
Well, it hasn't been felt at the pump. I noticed that the strategic reserves released at 50 million represented a 2-cent drop as far as fuel prices for the consumer in the States. We've got WTI sitting at 66.26. You've got Brent at just under 70 at about 69.88. So I wouldn't be surprised to see an uptick from here. They've been heavily sold off, Kara, exhausted to the downside. What a great trade crude has been over the last couple of weeks. So volatile, big washouts. And, if you'll learn more here than romper room, let me tell you that where we're looking at the US dollar and we look at those crude markets, there's just so much opportunity for traders. Again, big breakouts and big opportunities to make a dollar.
And Peter, elsewhere in the commodities complex, how are you seeing iron ore at the moment? Of course, as we sort of see it around that $100 level, do you feel, and once again, this goes back to that China story too, just as we position ourselves into next year, what are your thoughts on iron ore?
I don't think you're going to see a lot of move before the Lunar New Year, Andrew. So, it's just that it's cheap buying when you're looking at China's position. They're doing very, very well out of this, considering what they're paying for it. So there's the first part of it versus $150 or $180. So the producers are the loser. And then you probably could see further softness as far as price in the short term. I'm not expecting any much volatility across that iron ore sector leading up to the Chinese New Year. So I think it'll be pretty much range bound over the next month and a half.